And joining me on the podcast and on videos, Vadim Alexandre, Head of Healthcare, SP Angel. You all right, fella?
How are you doing, Justin?
I'm all right. I'm looking forward next week, right? I mean, this is my office in the garden. In fact, on the back of the wall there, you can sort of, I don't know if you can see it, but there's a picture of my office in the garden. But I'm in that office, and I've been sleeping in here for the last 10 weeks now because there's construction going on in the house. You can see the back there. We've had the render done, and they're putting cladding on. But that was supposed to be down like 2 weeks ago. So next week, we get, finally get the bedroom carpeted. Well, it's painted this weekend. Bedroom carpeted, and then we can move back into the house and sleep on a normal size mattress, apart from the sofa bed that I pull out every evening because it's been 10 weeks. It was supposed to be done in 3-4 weeks. And like then it just lots of delays, lots of issues happening. So yeah, it'd be nice to get in a proper bed, you know.
Yeah, maybe for Christmas. So that's
I know. Do you know exactly? Do you know what's annoying me, right? Yesterday, and I posted this on social media. Donald Trump rang the bell at New York Stock Exchange. And I love the celebration they have when a new company lists, is celebrating. The bell rings, everyone cheers. And in America, investing is celebrated, you know. And I think it's over 60% of people in America hold shares in a listed company. In the UK, it's half that. And I think in this country, right now, look at their markets. They're doing very well. Their economy is doing very well. They celebrate the success of business, investing in business, you know. And over here, Rachel Reeves and Keir Starmer have hardly acknowledged our capital markets, and they can't seem to sort of join the dots between a thriving, capital markets and a thriving economy, or a thriving business and a thriving economy. And I don't understand why. They should encourage people to learn to invest in businesses, to generate their own wealth. And I'm thinking, why are they just ignoring this? You can see the example across the pond there. It's working very well over there. It's not over here. London now, the IPOs in London, they are behind. We were like second or third in the world IPOs. But if it wasn't New York, they'd come to London probably, you know. But now we are behind, who is it? Oman and Malaysia for IPOs. It's dreadful, isn't it?
Yeah, I mean, look, I don't want to get too political on this call, but I think
But even the Conservatives, regardless
today,
of the political party, even the Conservatives, I'm thinking, why isn't anyone championing our capital markets? It's something to be celebrated.
Look, I agree with you, but it was a problem before also.
Yeah, absolutely.
I'm not condoning one side, or the other. It's just, it was terrible. There was very little support for our small cap markets under the Conservatives. You're absolutely right. There isn't any more support now. Still there's no support. It's true.
Yeah.
There's no, and if anything, the proof is in the pudding. The economy is slowing on the grim budget, and that's it. That's the announcement today. It doesn't matter what you and I say; those are the facts.
Yeah, and I'm not having. And this is not political. I'm just saying is when we talk about improving, public infrastructure, public services, that money pretty much comes from business, all of it. I mean, if you look at the SME market, I think it's 5.5 million small and medium-sized enterprises in the UK, and 99% of the tax from all business comes from small businesses, So if you enable those to thrive, they take on more people. Those more people spend in the economy. They also spend more tax. It literally helps our economy, and I can't see that should be, first of all, root and branch, helping businesses, not raising, increasing regulation and taxes. You can't tax away the growth. Look at this. These are the numbers today, right? Construction, minus 0.4, forecast of 0.2. It's like year on year, minus 0.7, forecast going flat. GDP contracted in October. It was supposed to go up by 0.1%. It's gone down from 1.6 to 1.3 year on year. Everything's flatlining. And I'm thinking, why? Because businesses don't have the confidence to take on anyone. They can't. And it's like, it drives me nuts. It really drives. I just think the way they have in America, the ethos of, in that, even just the celebration of the opening bells, is a nice thing. It's like people are listing their companies or they're celebrating being on the market for so many years. And it just gives a positive feel towards it, Whereas this country, they're ambivalent towards it. I don't think Rachel Reeves or Keir Starmer and even Boris Johnson don't even acknowledge the capital markets. We had great capital markets, London was, but it's like, it was, but where's it gone now? It's like, it just drives me nuts. It drives me insane.
I mean, we just saw Ashtead, saying that they're moving their primary listing to New York, which is quite, it's things like that we need to really stop. We need to stop that hemorrhaging
Yeah, but
definitely.
it's not so bad actually. Primarily listening because I studied about 90% of the business, but it's happened a lot, and not only now. It's just like now people you get this negative sentiment and you feed loop, almost a doom loop,
The
where
doom
people
loop,
won't
yeah, they
listen.
call it.
Well, yeah, they won't listen in London because everyone's saying they're not listening or they're delisting, whatever, and so it just really is a vicious circle. But look at those
It
numbers.
does. It
Oh,
does. And we had that in biotech for a while last, I'd say earlier in the year. But it seems to have slowed. So there was a bit of a hemorrhaging where companies were just delisting on the hopes of listing in the US. There is a grass is greener effect in that it isn't, you know what I mean? So I buy everything you're saying. I agree, in part with how the US is winning that race. We that's a fact right now.
yeah,
Except that for in healthcare in particular, you have to be a company of, I'd say, $500 million to be able to list successfully on NASDAQ. Again, it's a
yeah,
great venue if you have critical mass. The minute
yeah,
you tip below that, it starts to get really ugly very quickly, you know?
mm,
And the
mm,
bit that the Americans don't talk about is all their failures, right? And I think that's well
yeah,
known. It's all rah rah. Everything is great. But if you look at the long, and I'm talking about now, I'm bringing that conversation that you're mentioning about comparing the UK
mm,
to the US. I'm just bringing it into the kind of narrow field of healthcare and biotech, right?
yeah,
Which is our area of specialization, and it's actually not greener. It doesn't look very good there right now, and a lot of the companies that were suffering during the downturn are just suffering, I would say, in some ways more than here. So these are companies that, are down by 99%. And they
yeah,
used to be up to $1 billion market cap business, and that was a small cap company deemed a small cap company in the US. Now they're sub 100 million market cap, and I cannot see, an easy path out for them. Now
yeah,
there is some movement, and you do see some rallies. So maybe that's the way it's going to happen, but it is just not as crystal clear. Comparing that to the UK, which is, say, you take AIM as a market, also we have sub 100 million market cap businesses that are maybe in some way stranded on a market where there's less liquidity, but there is a following, and those shares, I just find it's going to be a lot easier for a company to move out of the sub 100 million market cap to the 100 plus than it will be for the NASDAQ companies that are sub 100 million market cap, because they
yeah,
have much longer to go to get noticed in America from the real investor base, like the non-retail. And there's nothing wrong with the retail investor base. It's just that you need the critical mass of big institutions to pull your shares upwards, right? I think
yeah,
on AIM, you have a better chance because the institutional market fishes in a smaller market cap range.
yeah,
You see what I mean? So
yeah,
we're all in retail. Like, I'm a retail investor. I like punting in small biotech companies. We talk about it here all the time, right? But my point is, for me to see my company, a company that I like, go from, say, 10 million market cap to 1 billion, we're going to need institutional buyers along the way at some point, right?
mm-hmm,
In
mm,
the US, if I was in a 10 million market cap company, I'm going to have to wait and hope for a lot longer before because it has to get a lot bigger. Okay.
yeah,
Here, if you go from 10 to 100, then you start to have institutional buyers start to pull it all the way up. So
yeah,
that's
yeah,
just the difference is it's just not that great there right now for these smaller companies. So it isn't all
yeah.
perfect, Justin. It's not
No,
all
I
grass is
understand
not
that.
100% green.
No,
And
I
then it's
understand that.
ironic.
I know
Yeah.
I understand that, but I just think the ethos in America for, the stock market is a more familiar thing to a lot more people over there than it is over here. And I think, and if you want to help your economy, then you almost, become make people familiar with it from a younger age,
Yeah.
saying these are businesses you can invest in, there's funds there that get better than the bank. And it's almost like it's not even acknowledged by, people up high there on the government thinking, and you think, why isn't it? Do you not understand that it's directly linked to the prosperity of your country, which means you'll get more tax take, you get more people employed, and will buy more stuff. Because if the way it's going at the moment, it's looking like people will not take more people on. So what you've got is less people spending in the economy, more people
Yeah.
taking from the state. And I think, come on. It's to me it's common sense, but it's like and I suppose the only positive from this is that after the budget came out, and Andrew Bailey, who previously said he's going to start reducing rates aggressively, pulled back on that. because he said now there may be inflation baked in because the wage increases from the government and also the costs are going up for businesses who will pass that on to consumers. But I think these figures here, now people are sort of changing their mind. They're saying they won't do a rate reduction this month, Bank of England, but now people are saying they may do. So
Mhm.
if
Mhm.
anything, I think the Bank of England are behind the curve with it. We may have a little blip in inflation in the short term, but looking at these figures, the economy is slowing down, and you
Yeah,
don't get generally inflation in a slowing down economy. So
yeah.
I'm thinking they may even be a bit more dovish here in
Mhm.
the shorter term. So hopefully, and that will be the change. That'll be the catalyst for biotech, especially small caps and
Yeah,
microcap stocks. That'll
yeah.
nothing moves the markets like central banks. And
Mhm.
when you start getting that interest rate coming down, which is going to happen next year, it started already. I'm just thinking, the Bank of England are being a bit more cautious than other central banks.
What's the forecast currently before these figures came out
Well,
today? It
I
was
just read
four
today
cuts
that
next year, I think, eh? Four
yeah. So
four
they're
quarter
saying
point
there's going to be
cuts.
3 to 4 next year rate
Yeah,
reductions.
yeah. So you're
But
right. That might be more now. It might be closer
yeah.
to five, including the first one imminent.
Yeah. So,
Yeah,
so they're saying they're not. It was being sort of nailed on as an 80-90% chance of not reducing rates at this month's meeting, and now
yeah,
that's come down to about 50-60%. So they're not quite sure. So
yeah.
they may happen, but at least the bad economy here may be helping. So I think 2025. And I think we said this last year. I think 2024 was going to be a good year, but I think now we have central banks actually globally reducing interest rates. I think it
Yeah,
will be very good for the markets because that wasn't happening last year, and that's where huge money flow is encouraged in the markets when cost of capital comes down. So
I
yeah,
agree.
I think it'll
I
be
agree.
well.
And
Anyway,
and the markets are leading indicators, right? So
yeah,
what's
yeah,
happening in the economy is not what necessarily happens in the markets. They tend to be seeing through the next downturn or whatever, a slowdown to the next year. So you're absolutely correct. And we are
yeah.
seeing a start to sentiment change. The punter's coming back in.
Yeah,
So which
yeah,
is
yeah.
good, which
Well,
is good.
hopefully. I
Yeah.
mean, I was looking at the AIM all share. We're going to look at Cambridge Cognition because I know we've mentioned
Yeah.
it previously.
Yeah.
They've had the CEO stepped down recently, but this is the AIM all share. It's
Hmm.
off the bottom here. This big rise. Like I said, that was the budget, the relief that inheritance tax wasn't scrapped completely. It was half so scrapped, but we've had
Hmm.
this big rise, and it's come down, hit this level here, hit this level here. So what you got here is low, higher low, higher low, and now you go sort of higher high here because the high here and it's broken up and it's consolidating. But it needs to get above this maybe even just the previous budget, 740, 744.
Yeah.
And then, but it seems now, it is up from an all-time low or
Yes.
recent all-time low. Well, you can't have a recent all-time, but a recent low of back in October 23. But it's literally been bouncing along the bottom pretty much. But
Well,
interest
that
rates
from
strong.
that low to that peak, in May,
Yeah.
there was momentum, but
Yeah.
it's that, see how it petered out, and then so the last
Yeah.
4 months of just, you're right, it's the lead, the run into the budget, all of that,
Yeah.
the U.S.
Yeah.
election just been weighing on the markets, and now it feels, you're right, that it's turning around, and that bigger trend from that all-time low is going to hopefully kick in. Uh,
Yeah.
do
And,
you
and,
think?
and they say,
Yeah,
the biggest mover of the market is central banks, and central banks are
yeah,
reducing interest rates. Like I
yeah.
said, there's no doubt they will be reducing interest rates for the next year, so that will see money inflow into the markets. I think it was 42 months of money outflow that
Yeah.
fund managers in
Uh,
UK, small cap fund managers have seen 42 consecutive months of money outflow. That's
But I've
phenomenal.
recently, is it true that the last month was the first
Yes,
inflow? Yeah, it was the
yeah.
first inflow.
Basically, people accelerated before the budget.
Yeah.
And then people thought, oh, okay, it's not as bad. And they went back in basically. So that was the first month. It was sort of an aberration really, because
Okay.
it's not the start of a trend,
Okay.
but you could see maybe that helped a lot. So
Yeah.
maybe if that's what we need. We need some kind of catalyst, and that's how the interest rates is the thing. And the sad thing was the budget delayed that a little bit, but hopefully they'll be back on course. Having seen these, like I said, figures, GDP and all that, construction figures, maybe the bank says, oh, maybe we should be less restrictive.
Yeah, no, I
Okay.
agree with you. I agree. I do see, we are seeing sentiment pick up in that respect, and because everyone's trying to get ahead of to your point about the interest rates. We did lose a year, obviously looking at this chart we have, but
Yeah.
it's exactly that's happened. Remember we were talking for a long time about interest rates are about to come down. They never did. Inflation was stickier, took longer. Even when it was back down to 2 or 3, 4%. The central banks were being cautious, right? And
Yeah.
it was sticky. It's remained kind of there.
Yeah.
so we have lost a year on that, and then it just dovetailed straight into the two elections, and then the budget. Do you know what I mean?
Yeah.
So the UK
Yeah. Yeah.
election, the UK budget, and the US election, all that's behind us now, which is great.
Yeah, yeah. Okay. Well, let's look at Cambridge Cognition. Let's
Yeah.
put the chart up here first. Just explain what they do. I mean, it's clear in the title there, but what does Cambridge Cognition do,
Yeah,
Vadim?
so they're in the area of helping pharmaceutical companies with their dementia drugs, basically.
Mm,
Okay, so they're the lead area. It's a big area, and right now in CNS, so central nervous system drugs, people are developing drugs for dementia, which is one of the biggest, healthcare categories that is of, there haven't been really any drugs. There's a couple recent approvals. They're not the most effective, but there's a big pipeline of them coming, and it's going to be a big category. Okay. Again, aging population. Other areas are not resolved, but being resolved over time. Namely, cardiovascular disease was, massively improved in the 1990s with the statins, right? So, cardiovascular disease used to be it still is one of the number one killers. Cardiovascular disease and oncology are the two big number one killers, almost tying, and depending what country you look at. But it drastically reduced the impact of people dying at a younger age. So people are living longer all around, all across the board. And then in immuno-oncology being a big win in oncology, also leading people to live longer. So the next big category becomes just plain aging, and dementia is that big area, right?
yeah.
So a lot of pharma companies are playing in the space. A couple of recent approvals, again, very a bit, not the best drugs that come out first, but they have an effect in delaying the onset of dementia. And Cambridge Cognition is basically a service provider to all those pharma companies that are developing drugs. What are they looking for? So they're looking for digital assessments of early signs of either dementia or an improvement. Okay, so they help. You can imagine a pharmaceutical company is trying to test a group of patients with the drug and a group of patients without the drug, and they just try to show differentials, in cognitive assessment. So that's what they are. That they're providing digital cognitive assessments of patients, how they're behaving as a result of the drug or not being on the drug. And you can pick up these things. For example, they have one service which picks up in the way people speak. So it's a voice recognition type of service where you can see differences in how people change in terms of the way they speak, in terms of the tone of their voice, et cetera, et cetera. And it's all obviously powered by AI, showing people basically are either improving because of the drug or not, or slowing the degeneration that dementia brings. Okay. So that's their area. And they've been trading quite well historically during COVID. And they've started to run into trouble post-COVID. And we've all been kind of hoping for, some renewed interest. And the problem there is fundamentally, if the biotech or drug companies that are paying them for their service can't raise capital, which has been the case for the last 2 or 3 years, there's less capital to go around to invest into drug development, and therefore these service providers take a hit. So they've been taking a pretty bad hit. And then more recently, they've put out a trading statement, again, showing that revenues are contracting. So it's been a hard, long slog for this company. I mean, quite frankly, for the last 3 years, they've been kind of going sideways in terms of their revenues or contracting. And I think what's changed about this announcement, the shares rallied a bit. I'm still unconvinced, I have to say, because a couple of things have happened. Obviously, over that time frame, share prices underperformed. Now the CEO has departed about 3 or 4 months ago. Still looking.
Yeah,
for
that was. I mean, that is odd, isn't it? I mean, it's like because he was spearheading sort of this the cost reduction campaign, focusing the company on on the core, and,
Yeah.
and then or expanding services. But I mean, and then all of a sudden just leaves.
Yeah, well, it's not uncommon when you look at what happened here. So we have the trading statement that it kind of explains it, right? There were, I think the market expectations was flat, 13.5 million year on year. Now it's 10,
Yeah.
in revenues. The silver lining in this announcement, and I think that's why the shares rallied a bit, is that they managed to keep EBITDA break even. So that's a
Yeah.
good thing. So somehow throughout all that, even though revenue is contracting, they managed to control costs. So that's
Well,
good.
that's it. There. So, I mean, they
But
said,
that bothers me.
cash.
The bit you just highlighted right there,
Yeah,
1 million
yeah,
in cash. I don't like that. So I don't like the fact that the shares are sorry, that the cash is starting to grow thin, and the fact that there's still no CEO. These are problems that need to be resolved. Unfortunately, sometimes with a fundraise, which means has negative implications for the share price. So
yeah.
who
But hang on
knows?
a second. So,
We'll see.
they say here, cash expect to be approximately 1 million. So, it's we need to go back to, they are reducing this. They break even. So, at the year end, and expected to increase during 2025. So that's a positive because they're generating cash. But they
Yeah.
do say, oh, you always got. I always say this. I mean, do you know what? In the book I just published, I say, listen, what management say and what the actual accounts say are two different
Yeah.
things. Now they're
Yeah.
saying they expect it to increase. Now, you can take a punt on that, or you can wait till the accounts come out and see if it does increase, because that's fact. Everything else is opinion. But I mean, at least that's a sort of positive. They're not going to be, they believe, burning cash unless it's expected to increase, unless that's via a placing, which they
No,
wouldn't
no,
mean
no, they
that.
don't mean
But no,
that. They
no,
they mean
yeah,
organically. But and if you look at the bullet right above that, that's another strong bullet point. That I don't
yeah,
want to miss that element is that their order book is strong for the
yeah,
coming year, and it's
mm,
strong, in terms of the sales pipeline. So that's
mm,
where they have confidence. They're break even now, and that's where they have confidence in cash generation in 2025, which is right, it's about to start. So I think you're right. I think you can play it one way or another. It's difficult to play right now. I mean, I've was a holder. I've sold some, 2 years ago it was a different story back then. And I've sold some, I'd say maybe a couple of months ago when I just don't like it when there's no CEO. Do you know what I mean?
yeah,
I think we've discussed this on this call. It's just very difficult to know what's going on in a business when you don't know who to call. You know what I mean? So
yeah.
so there you go. So they need some leadership, I think, and hopefully that'll be sorted soon. There was some statement about who they're lining up in the announcements, as in they're still, they've got a couple of people running it right now, but they're still looking for a CEO. But yeah, I think I've sold a third, I've sold another third, and I'm down to a third, and I'm also
Yeah.
debating what do I do here, so
Well, the thing is, do you know what? By the way, you should get a copy of my book, Vadim. So I've got 50. I've released last week. 15, 100% five-star reviews on it. But I do talk in there, and it's easy when you get caught up in a story of a company. Now, the positives here, literally, are they're hopefully going to be generating cash here. But make no bones about it. Small cap companies that are revenue generating, they are supposed to be growth companies. Now, if they're not growing, and that means top line plus
yeah,
profits, if they've got
yeah,
profits, or at least top line and reducing, losses. If they're not growing top line, that means they're not growing, because everything stems from revenue.
yeah,
And so you're thinking that there, so maybe it's a bit of a relief rally saying they're going to be profitable next year. But what I want to see is, are you growing sales? Because that's what we want
yeah,
to see. You're supposed to be growth companies at this size. So
yeah.
that's the thing, isn't it?
Absolutely. They're in a
Yeah.
growth area, and
Mm.
yes, it's been hit by the fact that there's less money in biotech right now,
Yeah.
but their market is still growing, so
Mm.
they have to be growing. You're right. I mean, if it
Yeah, yeah,
doesn't
yeah,
if it doesn't
yeah,
transpire, now they're contracting instead of
yeah,
growing.
yeah.
So
So
yeah,
I mean,
no, it's
sometimes
not
we
a
can look
perfect
too far.
statement. That's
y-
yeah.
Yeah, sometimes we can look too far into things, and when all we should be saying is, "Are you a growing company?" Because if you're, like I said, if you're unless you're a sort of FTSE 100 company paying dividends, you don't expect too much growth from them. Single digit, maybe low single digit, but they pay dividends.
Yeah.
But if you look at micro caps, small caps, the reason where they're listed is to grow, and when they start generating revenue and become commercial,
Yeah.
that should be increasing. That's the sales should be increasing. And if
Yeah.
they're not, then you're thinking it's not a growth company. Maybe it's rallied on relief that this is not as bad as we thought, cash wise, or that they're going to be
Correct,
profitable
correct.
next
And
year.
I think
Yeah,
that's what it is. It's some kind of
yeah,
relief rally. What
yeah.
I would say is anyone looking to pile in, I would also wait to kind of see a few things resolve. One is who's leading the business. That's important.
Mm.
Need visibility on that. And then, let's see how that cash position resolves, because it might have to resolve with a fundraise. And then that's the opportunity to get in.
I tell you what, though, when this company rallies, it bloody moves, doesn't it? Look at that. From the low in 2020, it was
Yeah.
18 pence,
Yeah.
and it did a 10 bag by 2021. That's
Absolutely.
phenomenal.
So one of the rare times in my life I was able to top slice, but not at the top, not at the
Yeah,
top, and not the full amount, a third. The
yeah.
next third I sold all the way back down Do you see what I mean? And I'm still with
Yeah.
the third. So I don't know if that's good or bad. I mean, I'm okay all in, like in terms of the average. The reason I'm saying this is because so many times in my life I haven't top sliced. You know what I mean?
Yeah.
And I've watched
Yeah.
companies go up and come all the way back down. And I think an example that you've described was Destiny Pharma in your case, right?
Yeah.
And you
Yeah.
just there has to be some form of a rule in terms
Yeah.
of when you lock, you have to lock in a proportion of your return. My regret is I should have done the whole thing back then. I
Yeah.
didn't, but I'm still okay because I've taken one element of that game. Do you know what I mean?
Yeah.
So
Yeah.
all blended average, it's about it. It comes in. You say there's a 10 bagger. A 10 bagger would have been better than a three
Mm.
bagger, but blended average it amounts to a three bagger. But
Mm.
thank God there was some kind of rule that I set going. This is the reason I'm saying this is not because I'm so great. I won't tell you about all the failed
Mm.
investments I've had, but the gains help you compensate for the ones you get wrong, right? And
Yeah.
the
Yeah.
only way to do it is when you do sit on a gain, is you have to take some of it, irrespective of how good the story
Yeah,
is
yeah.
at the
Well,
time.
you know, I've been, the reason why, if you're going to improve as an investor, you have to learn by mistakes. I think,
Yeah,
and we've made many, many mistakes 'cause we've been in the game quite a while. And one of the mistakes I've made, and I go over it in the book, and I say one of the things I do is always, if you're up, so even say 20, 30%, at
yeah,
least put a stop loss in at your where your buy-in price is. If you have 30%,
yeah,
because you should never be losing money on a company when you're like 20% or more on a stock. You should never really be losing money on that because
yeah,
so if you lock in that even at the buy price, even if you want to be extra cautious, but if you're up like 40, 50, 60%, you should never be making a loss on that. And I have in the past. I've
yeah,
doubled my money on companies and lost money on it because
yeah,
I didn't have any discipline. I just thought it was going to the sky. Never believe it keeps going to the sky, because when you start believing that, honestly, you tend to pile more money in, and then it starts dropping. You get in trouble. So you can have a strict rule saying, I'm going to lock that in, and at least I can't lose. And once you can't lose, that's perfect.
yeah,
You've removed the risk from risk and reward. So
correct.
you've only got reward. So but that chart there, I quite like that because you got last couple of days it's pumped up here, and then it's
Yeah,
come down. So you say this is the previous high there, 31 pence. It's now, and maybe I'm not so much volume today because not, but it's now opened up 32 pence. What's the volume here? Because oh, it's not bad. The average daily volume is 51,000. You're at 32,000. So that is a higher. If it stays above that, that's quite bullish. I know it's early signs, but that's quite bullish. Above 50-day moving average. Look, it hasn't done that since back here, and we're at a lower valuation now. And we've got this line here of support. That's not a bad, good start. That's a good
feels like
maybe
it's
little pump up
recovering.
like that. You often
Feel,
get a big breakup like that. What was that? How far did that rise there?
yep.
Yeah, about 7%, and then it consolidates. Then it pumps up again. That's a good sign. That though, that's quite a good sign.
It is, but this is where I find there's might be some danger in this relief rally. I'm not
Mm.
100% convinced yet. And don't get me wrong, I've always liked this story. That's why I'm still holding a third. But I'm
Yeah.
sitting there saying now, I mean, what am I adding? No. Am I maybe,
Yeah.
selling the last third on the relief rally? Maybe I will. Do you see what I
Yeah,
mean?
yeah.
Because
No,
I'm
I think
just,
you're right to
yeah,
get concerned. Like, it seems like a relief rally. It's not based on fundamental growth, is it? So we know it's a little bit of a relief rally. Maybe some sellers have exited, some buyers have come in. That's it.
yeah,
And so
yeah,
yeah, so it's not. Yeah, you're right not to be super confident on that as yet because it's like the revenue's not contracting. So there we are.
yeah, exactly.
And the cost base is being cut, but that's not what we want. Okay, you got to go soon. So two other stocks you're mentioning. Was it Hemogenyx you're mentioning? Is it?
Yeah, so Hemogenyx, just because they have their apparently their stuff, they're ready now to commence their clinical trial, which is good. So I think there's going to be, and well, the market will be anticipating that news flow, and I think it is already. Um, that'll be like the announcement that is the big announcement for a business at this stage is the first patient being tried in their clinical trial because they've been a preclinical company throughout their whole history, and the next step and their own the point is that's the imminent step is that they will be trying patients with their first clinical therapy called the CAR T therapy. I think that's just that the point is just flagging it here today because at any moment I think that could be part of the next phase of the business. And when that gets announced, I would expect a share rally. They've consolidated their shares. That just
Yeah, I
happened
was going to say
today.
they're four quid. I was going to say then. I
Yeah.
thought, yeah, I look at the last time I looked at it is 1.3 pence, and now they're
Yeah.
like 4 quid a share. What's going on
Yeah.
here? So okay, Yeah.
I'm flagging it today because they just did the consolidation today, so they're about 4 quid.
Yeah.
So that was a
Okay.
400 to 1. They were 1p before. And you know, penny shares, I think they have in their announcement, is in their explanation as to why they're consolidating, is they're anticipating, they're in, I guess, discussions with US investors and hoping for a US investment to come in. So let's see what happens there.
Okay.
Um,
Okay. So they're
yeah.
not. Yeah. Yeah. So they're doing it. Okay. All right. Cool. And finally, talking about the US, which we talked about a bit. A company sort of listed over there from
Oh
here.
yeah, yeah. No, the other one that I wanted to mention was Spectral MD,
Spectral
which
MD. Yeah.
it's called Spectral AI now in the US.
Yeah.
So this is the one that listed in London years ago, and then moved over via SPAC deal to the US Nasdaq market. And it wasn't, it's also in a down market where things just got worse from worse to worse in the markets for these types of companies. But in the meantime, their business keeps on ticking along. They have a huge BARDA contract with the U.S. government, which is forecast to generate about 28 million this year in revenues, of which they've already announced 21 million. So they're on track there. But I think the big announcement that's coming is they're doing a pivotal trial, effectively on their technology to submit to the FDA in H1 next year. So when that trial data comes out, and they've said before the end of the year, it's going to be, I think, pretty big news. And already this tends to happen in markets. Traders are anticipating that, so you're already seeing the shares go up. Okay.
Yeah, look at that. I mean,
Yeah,
it's across the 200-day moving average. Nice spike up there. Maybe a period of consolidation. But this is $2. They
exactly.
listed, wasn't it? I mean, that was a farce there, wasn't it? What happened there when they listed? It listed what, $10, was it? Something like that? And it went
Yeah, yeah,
to
exactly. It was that
20.
that spike and all that is a bit irrelevant, but it was $10 was the reverse, whatever
Yeah.
takeover.
So they've got a bit of ground to make back, but
Yeah, yeah. I
that's a
think
good
UK
that's a good move.
investors at the time, I think the IPO price from 4 years ago is probably around $7 or seven and
Yeah.
a half dollars. So there's like quite a ways to go, but it's good to
Yeah.
see a recovery now. There's a bit of recovery, and the hope now is that the results come in good, and we see another spike. That would be great result. That would be a great result.
Well, look at that. You got this spike of 150 there. This was support there last time. It broke that down, then
Yeah,
came back up, tried to break it, couldn't do it, and then broke down. Now it's really, when you get a strong shoot through a previous support and resistance level, that's quite
yeah,
good. And it's
yeah.
shot up to through 200-day moving average. So it maybe needs a period of consolidation for a bit. But yeah,
And huge,
31%.
huge,
Wow.
huge liquidity bursts, like
Yeah.
real major liquidity.
So
If
went up
you,
31% one day, then 14 or 15% the second day. So that's a nice
yeah.
little move in 2 days. And now consolidation may be needed, but cool.
And the next
Do-
year is a big news year for this company. We'll
Yeah, yeah,
hopefully be talking about it again in the new year, because by the time we speak again, there will hopefully have the announcement of whether their trial went well or not. You know what I mean?
yeah,
So
yeah,
that's that, because they've said it's going to happen. They're planning to announce it by year end. So
yeah.
we're anticipating this, announcement this month.
Cool, cool. And what do you still hold any of these?
I do.
Or
Yeah,
not? Yeah,
yeah.
yeah, yeah.
No,
Okay,
I'm a
cool.
holder. I'm underwater. I'm
Yeah. But the thing is, anyone who invested in the UK, you can't help, not unless you average down at the really low, because the low was,
yeah.
is point 0.8, so it's not far off the low. And a few months back, the low happened. So, there's not many people not underwater who hold these, I suppose.
But I
But
am holding on for now because I want to see what happens. Like I do think, there's some good news ahead. And,
mm,
starting with this trial, let's see what
yeah,
happens with the trial results. It's
that's
imminent.
a good,
Yeah.
yeah, cool stuff. Marvelous, Vadim. Thanks for that, fella. And we'll speak. Well, in fact, have a nice Christmas. We'll speak in the
Yeah,
new
yeah.
year.
Merry Christmas. Have a Merry Christmas,
Yeah,
Happy New Year,
and a
and a
happy
good
new year.
holiday. And,
Yeah.
hopefully the house will be fixed. You'll get to
Well,
move
yeah,
in.
who knows? Fingers crossed. It should have been in there like 3 4 weeks ago. But there we are. But three-quarters is done. It's just a bit of the outside and a bit of downstairs. Marvelous.
Good
Thanks for
stuff.
that, mate. Speak soon.
Excellent. Thanks, Justin. Take care.